In this video, I'm going to break down where rates are right now, what the Fed is likely to do, and how it impacts your wallet. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. If you're new to the TIL, TIL stands for Truth in Lending and in Life. So where are rates recently and where are they now, right? So if we get into looking at a U.S. Treasury over the last 30 days, the low was roughly 4.11%. So currently, we are hovering for about the last 5 days or so at 4.23, and we were at a high of 4.28%. So 30-year mortgage money is closely related to 10-year Treasury money. It's a good gauge to watch, but the fundamentals of the rates are traded on mortgage-backed securities. But here's the thing. Even though rates on a national average are 6.26%, according to the Wall Street Journal, I locked a high balance purchase at 5.99 with 0 points today. And I also locked in a VA IRRRL where the veteran was exempt at 5.49 and paid all their closing costs. So even on a purchase on a VA loan, it's below 5.5%. So high fives, conventional, mid fives or below on VA loans and FHA loans. But why would their interest rates, if the 10-year Treasury is higher over the last 30 days, why would rates be the same or better? Here in the nutshell is the reason. The FHFA has expanded Freddie and Fannie's ability to maintain a higher portfolio. Now, Congress had capped Freddie and Fannie at $450 billion together. But they've been running it at only about $40 billion during the last two administrations, trying to keep a tight rein on Freddie and Fannie. President Trump announced that he wanted $200 billion in MSBs bought with the portfolio money that's being managed and sitting there doing nothing. They want that invested in mortgage-backed securities. So Bill Pulte just raised the allowable portfolio under management for each of them to $225 billion. That's technically $185 billion each. So almost double what the president asked for on the $200 billion of buying, right? So that tells me they're being set up to potentially even maybe be able to buy even more. So that's why interest rates have been holding steady even though the 10-year has been fighting things, right? So a couple things. The Fed is meeting, two-day meeting today and tomorrow. I'm expecting what I call a nothing hamburger. I expect them to be on a pause, especially on the basis that inflation is still higher and some uncertainty in some of the Supreme Court rulings that are going to be coming out and whatnot, and also the pressure from the White House to lower rates. I expect Powell to somewhat stand pat. The CME, Fed Watch, has a 95% chance that they do nothing for essentially the next 3 months, maybe just slightly under a 50% chance of a cut potentially in June at the latest. So one of the things, here's a 10-minute read on the CME. CME is a great place to get some data. It is free. You can sign up. But this article went into, will central banks have to reverse course and actually raise interest rates in 2026? It goes on to discuss the gold and silver rises and deflate the quality there. Inflation is above target everywhere. So across the world, if you looked at the inflation numbers that are the expectation and what they want, they're higher in every single category. So central banks are easing into this, and essentially that could be a cause for interest rates to have to actually reverse by the end of the year. I personally feel that interest rates typically go on a 2-year basis, and I feel that we're about 18 to 20 months into a lower rate environment, and usually at the end of that 2 years, we often get a pause. And in conjunction with that, then once that pause takes place, rates go in one direction or the other for another 2 years, typically, okay? Rare do you see the Fed go up and down within a year cycle unless there's a big market mover of some type. Couple things. If you're a first-time home buyer right now, and we're going into the spring market, couple things that I feel that you should be thinking about. One, formulating your team is one thing, and also double checking your budget. I highly recommend that you go to FreddieMac.com and search for budget. And pull up the budget worksheet. You can go through this, you can download this as a blank PDF. And I highly recommend that you use this for the next 2 months. I fundamentally want you to understand what your rent DTI is, debt to income. So take your rent divided by your gross income, and that's what your current housing ratio is, okay? And then I want you to also figure out what your credit card, student loan, all the debts that would show up on your credit report, and add those to the rent and divide that by your gross income, and you'll have your rental debt to income front and back ratio. Front ratio is just the rent, back ratio is everything. Secondly, I want you to use this budget. I want you to write down every single item that you spend money on over 2 months and actually do the budget. Now, what we're looking for is, what is your residual income or savings after all your expenses? And then I want you to analyze where you could sharpen your pencil and actually save a little bit more money. Now, in doing that, then I want you to add that to your rent, and then that should be the maximum that you might be comfortable with a mortgage payment. In the end, I want you to take a true look at your expenses. Secondly, we're talking about formulating your team, right? So one of the things that I like to discuss with someone is cart and horse, right? So If you go looking for a realtor, they fundamentally are going to probably recommend one or two lenders for you, right? The average realtor probably does 10 to 20 transactions potentially a year. And so they're potentially working with a few select lenders that they choose, and then they have no control over those others, right? Very rare do agents keep a database of all of the loan officers that they've ever done business with, but some might. Conversely, a good loan officer is probably doing anywhere from 50 to 150 transactions a year and dealing with a lot more realtors versus a realtor dealing with a lot more lenders. So if you're starting to formulate your team, I feel that you should start getting pre-qualified with a couple mortgage lenders or mortgage brokers that do it for a living. Someone like myself, I've been in business for 30 years. I have over 500 agents in my database. I can help you find a couple good recommendations for realtors. Doesn't mean you have to use them, but in general, I probably know specifically where some agents have worked, exact areas that you might be buying in, okay? Also, the first thing that a good realtor is going to ask you to do is to get pre-qualified. So in general, I feel that you should probably start with a good mortgage broker. You can also find mortgage brokers very easily that are associated with the #1 wholesale lender in the country by going to mortgagematchup.com. If you go to mortgagematchup.com, and I'll pull that up, if you go to this website, it truly is as simple as typing in a zip code. You can type in Maryland, we'll go with 2089, we'll go 20950 just for fun. 20950. Let's go with 20850. Rockville, Maryland. I did not expect to potentially show up there, but I did. Okay, so I showed up as #1 in that area, along with a few other agents, right? If you type in 22310, which is closer to my backyard, I show up pretty strongly there also. But here's the thing, no matter, just for fun, I'm going to type in where I grew up, 43512. One gentleman, C2 Financial, in essentially northwestern Ohio. But this website is ran by United Wholesale Mortgage, and they're the #1 wholesaler in the country. And in most cases, you probably have a lot of options using this website. My name is Kevin Retcher, owner of First Meridian Mortgage. I do not think the Fed is going to move tomorrow. I do think that they're going to do a pause, and they're going to wait and see what inflation actually does and what unemployment actually does. And I do feel that the economy can run a little bit hotter with productivity being better via AI. So my name is Kevin Retcher, owner of First Meridian Mortgage. That is your Tuesday market update. Be looking for the Fed announcement tomorrow on Wednesday. Typically, always remember that rates are the lowest the week before the Fed meeting in each cycle. So depending on what the Fed says tomorrow, if they do nothing, I think rates actually may rally just a little bit, and maybe we'll see that 10-year pop below the 420 pivotal level. Again, if you have any questions about mortgages, insurance, or real estate, give me a call. My phone number is 703-799-5626, and this is your latest episode of The Till. Talk to you soon.